Hey, good afternoon, my fellow crypto traders. I'm bringing you a midweek update for the crypto space. I'm doing this for several reasons. Number one, I'm seeing several key indicators that are telling me we're getting close. We're getting very close to something big. Number two, big key indicator, if not the biggest. I'm going to be out of office the rest of the week. And every time I'm out of the office, not staring at the chart, something big happens. I can almost guarantee it. So I want to just quickly update you on the state of the markets in the crypto space, let you know where we're at, what I'm thinking, and what might happen during the time I am out so that you all can be prepared to make moves, make trades if you're so inclined to do so. Let's jump into these charts here, guys, and I'll try to be as quick as possible. I have to be as quick as possible to get through the 20-minute mark. So here's my BTC chart. We're going to cover that in just a bit. For the time being, I'm going to delete that text and we'll scroll to the top here, start with the dollar. Really what I want to reiterate is everything is playing out exactly as I have anticipated. And that's a good thing, all right? No surprises so far. Dollar, I expect to continue to come down, all right? And that correlates, by the way, with the data I am seeing elsewhere. Now I'm going to jump around quite a bit in this video, and while I'm thinking of it, I want to jump to US housing starts, which has just crossed below a major trend line. All right, so this has not been crossed below since March of 2011. Of course, there was a brief breach here, and then 2020, you can just kind of throw that out the window. That data does not deserve really to be recognized. But when U.S. housing starts crosses below this trend line, guys, that is a major sign of disinflation. All right. And why am I bringing this to your attention? Well, because the Fed continues to talk about tackling inflation. Now, when we see data like this coming into fruition, coming into play, and starting to be recognized, it will be picked up by the Fed, all right? And so it is possible that the Fed was a little bit too aggressive in tackling inflation. Some people say they were not aggressive enough. My belief has always been that they've been a little bit too aggressive tackling inflation, which was caused by this whole anomalous global shutdown due to the pandemic, and then preceded by the printer presses firing up and causing that inflation. All right, but we are seeing signs of disinflation, and here the U.S. housing starts is telling us that there's other factors at play, all right? Additionally, I've talked about energy. Energy has come down in price, which is something that has surprised a lot of people. It is still coming down, and one of the things I've talked about is the possibility that it actually breaks below this channel. We have remained inside this channel, this upward ascending channel, since 2020. All right, so energy prices have gone up. Well, this is U.S. oil, but it's the main energy resource. All right, so it's a good indicator. Now, energy prices have come down inside this channel, have tested the bottom, and look at this big candle here, guys. A big red candle. It is a possibility, as I've mentioned, we break to the downside of this channel. If we break to the downside of that channel, that again is a major disinflation indicator. All right, what that means is the Fed doesn't have to tackle inflation as they have been doing. So we can expect less than a 75 basis point hike. I quite honestly think that 50 basis points in the next hike, which is September 13th. Let's put this line up here. Alt V. All right, September 13th, we're going to get CPI data. All right, that's the big line in the sand. And this timeline actually is correlating with all of my data. So I'm going to show you why. But if we're factoring in these disinflation charts, indicators, it may show us that the Fed has in fact been a little bit too aggressive and will either pull back to that 50 basis point hike, or I have been suggesting this for quite some time. What if they end up pausing interest rates? We have U.S. elections coming up, which I know is not supposed to play into this, but always does. All right, that is, something that unfortunately in American politics today we can't get away from. So you have to remember that as well. All right, VIX is continuing up inside this bullish megaphone pattern. Currently, it is the predominant indicator. All right, we've defeated the 50-day, the 200-day, and the 100-day moving average here over the last 3 days. All right, touched the bottom of this support level and are ascending up. Now, I expect around the 13th of September, when that CPI data comes in, we touch the top of this megaphone pattern. What happens then? This is kind of what I'm seeing in the charts from all of the data. All right. So as I mentioned previously, we have this miniature head and shoulders pattern. I took it off the chart here, but I'll draw it real quickly. All right. And the target down is 3,900. We haven't quite reached it yet. So the data on the VIX is showing me that we still have a little ways down. As this proceeds up, all right, the S&P 500 proceeds down, all right, and we shall reach that 3,900 target. What happens then, you ask? All right, well, that is around the time, all right, we can draw our vertical line here as well, 13th of September. I think we reached that before the 13th of September. I think the market sits on this support level. We see CPI data comes in. We hear word from the Fed that they're going to be more dovish, and then boom, take off. All right. Now, that is a contrarian opinion, possibly. But as you know, I am quite contrarian in my analysis, and oftentimes to my detriment. But take that as you will. It's only my opinion. It doesn't mean anything. I am not actually a prophet. I cannot actually predict the future. I'm only reading data from the charts here, guys. All right. And the S&P correlates with the NASDAQ and everything else. We have head and shoulders pattern here. My target down was around the 200-day moving average or the 50-day. Maybe those two coincide and give us a good area of confluence, and we can expect a bounce there. We shall see. Okay, the other thing I'm looking at is Eurodollar futures. All right, this kind of is a future representation of Fed action. As this goes down, Fed rate hikes go up. All right, as this goes up, Fed rate hikes are either paused or going down. All right, that's the way that this chart, that's the way you read this chart. So I have here an inverse head and shoulders pattern, which is pointing to the fact that the price here could go up, indicating that the market has in fact already priced in a 75 basis point hike, and maybe we only get 50. And then this goes up to the 100-day moving average, and that would all make sense. The 10-year versus 2-year inverted yield curve, all right? We're heading back in the right direction here, all right? We don't like to see this yield curve being inverted. That is a major sign that a recession is coming. Hasn't come yet, and I don't believe it has come yet. I know a lot of people call this a recession. I don't. And the reason I don't is because if we zoom out here to the weekly, get our 100-day moving average, you really want to break below this 100-day and maintain a level below this 100-day moving average. We're slicing it up here, but we haven't really confirmed anything here. And maybe it's more so, let's see, we have more data on the SPY. So let's go back a little ways, all right? So you can see when we go below this 100-day moving average, or the 100-week moving average in a big way, that is our recession period. All right, do I have my drawing utensil? Yeah, right here. All right, that's a recession period. And we have gone below the 100-week moving average, but we're headed back up, broke to the upside, which is an interesting sign. It shows a lot of uncertainty in the market. And we see this wedge right here. This is a descending wedge, all right? And we've come back into this descending wedge of sorts, which is a bullish indicator as well, all right? I don't know that I've ever drawn this out before, or actually that I've even spotted this, but that's what it looks like to me. Anywho, moving on here. What else do I want to look at? Just giving you the quick, short and skinny here. Our dominance has continued to move up. Zooming back out to the daily, I want to show you some fractals here. So we moved outside of this bullish wedge. All right, and if I were to take that fractal and measure it from here, we are almost at the target up on our USDT dominance, as well as the USDC dominance. All right, so we're almost there, guys. We're not quite yet. In other words, you can expect a little bit more pullback, but very close. Now, what else can I find that confirms this? All right, well, I've done something here on the total 3, which is the absence of Ethereum and Bitcoin, and you can see this bullish wedge here. We haven't broken out yet, but we're about to break out here on the daily. All right, if I zoom into the 4-hour chart, you can see that more accurately. I draw this out on your charts, guys, because the minute we break to the upside of this is the minute that the altcoins start to take off. All right, so I'm watching this closely. Another thing here, and we'll just jump over. Yeah, let's do our Bitcoin chart now. All right, so we have, as I've talked about, this longer trending, descending, bullish wedge. All right, this started way back the top here in November of 21. So we've remained inside of this for a good 10 months. And here's my line here, September 13th, when that CPI data is released, and we expect some comments from the Fed. And look at this. This is all lining up. We have a descending bullish wedge inside of a larger descending bullish wedge. Could we break down and go to the bottom side of this? Yes, of course we can. All right. So you can go down here and then pop back up. The greater probability, however, suggests that we pop to the upside of this bullish descending wedge. And here's where I think we meet a good area of confluence around September 13th. Right here, you can see I have major resistance at around 2200, 21.9, 21.8. Some people draw it a little bit differently, but that looks at like 21.9 is good resistance. All right, and that intersects the top of our ascending or descending wedge, which we didn't quite get to up here, guys. Remember I said I was expecting us to come up and at least touch that. We didn't get there yet. All right, so the market wants to test that as resistance. All right, so this is where I see we meet that, and then the market becomes undecided while the data is being released, while the Fed and Jay Powell comes out with their press releases, etc., etc. And pending upon their decision, we either pop out of this bullish descending wedge and start taking off again, or we drop like a rock, drop it like it's hot, and down we go. All right. My expectation, again, I'm only an entertainer here, guys. I'm not telling you what's going to actually happen. My expectation is that we go up for all the reasons I've already stated. All right, the other thing I wanted to update you on in this video is I have cleared a trade here. All right, so I had on my trade tracker, I'll bring this up here. Let me just maximize this. Matic, I was short Matic. I closed that out. All right, so I'm going to put that in the description here as well. I closed that out for a modest 3.5% profit, and I'm only in 3 positions right now, and that is over here, Dogecoin Gods and NWC. All right, I do expect hopefully to hold on to these so that my stop outs are not reached, because I do expect them to take off soon. I'm looking at some other trades too. I'm going to show you those, guys. Let me get my mouse back here real quick. We have 16 minutes and 30 seconds into this video. I'll show you, well, first of all, I'll cover why I kind of got out of Matic. All right. It just didn't drop like I expected. So let's jump over to Matic here. This is the Matic chart. All right. So, as soon as we went under this trend line, I took this position for a short. My target down was really around that 100-day moving average. All right. And it didn't drop like I expected to. And when that happens, I'm kind of like, Matic is a pretty bullish altcoin. So when I'm in the green, I want to take my profit, and that's what I did. I cashed out. Could we still get to the 100-day? Yeah, very possible, very probable, especially with the pullback, the further pullback that has to play out on S&P, Bitcoin even, et cetera, et cetera. We have just a little bit more to go. So yeah, with that, then the move down in the altcoin space will be exaggerated. Additionally, down here on the RSI, you can see we're above this trend line. So I would expect us to come back down and test that trend line on the RSI, which would bring us down to about the 100-day moving average. So I guess long story short is I just kind of chickened out here on Matic. I was in the profit. I decided to take my profit. I'm kind of playing it safe right now. And that's what I did. All right. The trades that I'm in, let's just take a look at those real quick. I'm in Dogecoin. All right. My order got triggered at 6.37, 6 cents, 6.37 cents. All right. And so we have come down, touched nicely the top side of this descending triangle. And my target is almost 10 cents, 9.37 cents is what my target is there. And that's still in play. Gods is still in play. My stop limit is 26 cents. All right, we're still in this descending wedge. We actually kind of broke out. It's been playing with us. Broke out and then came back in. All right, but I do expect soon some movement to begin in Gods. And if it doesn't, I've got my stop out at 26 cents. News crypto has been hot, hot, hot. This is just doing nothing but forming bullish flags. Bullish flag here, bullish flag here. And that coincides or correlates with the data here, this inverse cup and handle, or this, cup and handle pattern, not inverse, cup and handle. And that takes me to target way up here at 24 cents. That's some good profit on that one. All right. So the next trades that I am considering, really, guys, is, only 45 seconds left. The big one here is EOS. All right. So we've come right back down to this level of support. Actually, when I started the video, we were right on this trend line and I wanted to buy it, and I should have bought it before I started the video. But EOS, look for a trade alert. All right, these free trade alerts are out there for you if you subscribe at my site, studom.us. And please, guys, if you value this content, give me a like or subscribe. That only enables me to further propagate this content and help other people. Only like or subscribe if you find the content useful. All right, that's my update. Peace, y'all.